Hi, David Bassanese here, Chief Economist at Beta Shares, and just wanted to share with you a snapshot of my latest global market trends report. And reviewing the month of September, well, the pullback we've been anticipating in equity markets did finally arrive, and the sectors that have been doing well in the last few months really led that pullback. So it's been a US-driven, technology-driven pullback in prices through September. The global MSCI index down around about 2.7% for the month. I think it really began with there was a lot of expectation that Tesla, for example, was going to be included in the S&P 500 index as part of its rebalancing. Now, when that didn't happen, we saw Tesla shares come off, and I think that led to just a bit of a reappraisal in the tech sector more broadly. Other things happening over the past month that were notable is that the COVID cases have started to spike up again in Europe in particular. But a bit like in the US, what we're seeing is that the second wave of COVID cases aren't being associated with a similar spike in death rates and hospitalisation rates. So far at least, we haven't seen countries return to the lockdowns that we saw earlier this year, which I do think bodes well for the global economy going forward as we head into 2021. Just looking at some of the fundamentals, I mean, what's been interesting also is earnings expectations have held up over the past month, so the markets are still anticipating a decent rebound in global earnings next year. Equity valuations are still at the high end of their range over the past decade or so, just over 20 times earnings. But again, with interest rates still very low, they didn't go up very much in the past month. Those high PE valuations at the moment, largely sort of justified by the very low level of interest rates. Going forward, the next big risk factor for markets, of course, is going to be the US presidential election. And in particular, not so much who does win the election ultimately. I mean, the markets would probably prefer if Trump were to win and the Republicans retain control of the Senate. But even if he doesn't, I think the markets will eventually learn to live with even a Biden victory. But the bigger issue is if we get a period of uncertainty in the aftermath of the election and court cases which drag out that election result. And the longer that happens also, the more likely we'll get delay in further US fiscal stimulus, which the market is sort of continuing to count on as well. So that's pretty much it for this month. The next few months, again, are going to prove very, very interesting. If you'd like to see the full details of my report, please visit the Insight section of our website. Thanks for listening, and I'll see you again next month.